So now we are moving to the last panel discussion for today. And I very much welcome Peteris Zilgalvis, Rupert Keeley, Petra Hielkema, Pietro Sella, and Markus Treacher on the stage. The panel will focus on the impact of fintech on retail payments ecosystem, and we are extremely lucky to gather experience from fintech investors, payment innovators, and public authorities on that panel. The panel will be chaired by Peteris Zilgalvis from the European Commission. Peteris, please.
Thank you very much for introducing me. I'm Peteris Zilgalvis. I'm co-chair of the European Commission's FinTech Task Force and head of unit for startups and innovation. It should be said that when we set up the FinTech Task Force, Payment Services Directive 2 was basically done. So that was carved out of our work, but very obviously this is one of the guiding lights of innovation in the European Commission in this area. I mean, just very briefly, what we're doing, we had a FinTech public consultation, which some of you might have been aware of. We're working right now on a FinTech action plan, which will be published at the beginning of next year by Vice Presidents Dombrovskis and Katainen, along with Maria Gabriel. We have a public tender right now open on the feasibility and opportunity of an EU public blockchain infrastructure. Blockchain is something we're very much engaged with. Smart contracts at the International Standardization Organization level, reference architectures, all the way in there. So that gives a little bit of an idea, at least what I'm going to try to pull into this conversation, but we have very esteemed experts here who I'll introduce in a moment. We'll be looking at what the impacts on the retail payments ecosystem might be of distributed ledger technologies, the aforementioned blockchain, the virtual currencies, cryptocurrencies, digital currencies possibly. We see the high level of fintech investment rising again and again. Do we have consolidation in the sector coming up? Will fintech improve the existing processes, as we heard, help the banks connect to the consumers better? Or do we have real disruption and disintermediation on the horizon? So in this panel, we're aiming to discuss the impact of fintech on the retail payments ecosystem by bringing together the experience of investors, innovators, and public authorities. And now the short introduction. We have Petra Hielkema, Division Director of Payments and Market Infrastructure at the Netherlands Bank. Petra is the director of this division. It's responsible for payments and collateral operations, as well as oversight, policy, research, and cyber intelligence. Furthermore, the TIBER program, Threat Intelligence-Based Ethical Red Teaming, reports to her. We also are very honored to have here Rupert Keeley, Senior Vice President and General Manager for PayPal EMEA and CEO of PayPal Europe. Rupert is in charge, based in Luxembourg. He has responsibility for leading the development of PayPal's business across the region to capitalize on the rapid growth in commerce conducted over the internet, mobile channels, and increasingly in the offline world. And of course, PayPal is the very original fintech startup, which we now all know. Then I have the pleasure of announcing Pietro Sella, the CEO of Grupo Banca Sella, Banca Sella Holding. Pietro has been CEO of Banca Sella Group since 2004. This is a bank founded in 1886, but that has been in fintech and in financial technologies deeply already for about 20 years. So this is very impressive, with 40% in e-commerce, as I understand as well. So very interesting to hear about how a traditional actor is very much stepping up into the digital revolution. And then finally, I have Markus Treacher, Global Head of Strategic Accounts at Ripple. Markus has over 30 years of experience in transaction banking and payment technology, including 12 years in global leadership roles at HSBC, and as a member of the global board of SWIFT from 2010 to 2016. And with that, I'm happy to pass into the first question that I'll put to our panel so that we can benefit from their expertise and their insights. And I'll be asking, what impact will the high level of fintech investment have on the retail payments ecosystem? So let's start from that end.
Well, thank you. And it will have impact for sure. I think what we see in the Netherlands, in the market, we see a lot of fintechs coming up in my current position, but previous to this I did fit and proper testing of new of new board members of entities in the Dutch financial market, including fintech. And they're fun and they're energizing. So I think we very much support this, and we think they will have a place in our markets. And at the same time, it means we will have to look out for any increase in risks, being the supervisors at the Dutch Central Bank. In short, what could they do? I think it has passed today already, but what you can see is either evolution, so it's fintech and banks working together and joining forces. It can be the disruption. And talking to that, I talked to a banker recently, and what she said was, when I think about fintech, then for 90% I'm really excited, because we're working on it and we're getting there, and we're learning from them and we're working together. And says, and the other 10% is panic, because I'm not sure what's going to happen in some cases, particularly when you think about the big tech. And in the middle there, I think you have the fragmentation. And I think that's a field where we have to look as well, also as central banks, how it will fragment, and what will the fragmentation have as an impact in the short run and in the long term.
Well, I think it's the investment's wholly positive. We are going through, as we've all agreed, this revolution in financial services and payments. And I wasn't here this morning, but I would have voted for a technology-enabled but consumer-led revolution. And I think the investment in fintech is bringing a lot of talent and fresh blood and fresh thinking to address changing consumer needs. Most of us are across the industry, whether a regulator or a bank or a new player or a retailer or a merchant, are struggling to keep up with the revolution, that consumers are moving faster than the rest of the industry. And this new flood of talent we're seeing is helping address new issues, new needs, as well as tackling some traditional problems. You look at some of the ways of onboarding customers, carrying out KYC. A lot of that is coming in through new thinking, new blood, new talent. So I think it's wholly positive.
I agree with Rupert, and I agree with this most aggressive vision we heard this morning. So what I see is that regulation on one side, PSD2, and on the other side, technologies, are giving ground for any kind of new solution. Most from fintech, non-bank newcomers, some from incumbents, but going to better service to customers. So at the end, we will have a disintermediation on one side. My best view is my kids that usually settle, I have 5 kids, they settle the day using social network, then they regulate and settle everything using social payments, and they expect to subscribe to the banking service just using Facebook, and subscribe, not even opening an account. So your car pay the toll, your TV pay for the movie, your fridge is going to pay for the milk. And with IoT and so on, all these things will happen, even for business and B2B transaction. And so I see very good effect for the economy, so great financial inclusion, lower cost, higher rapidity, and new business case solved. On the other side, I see fee reduction, so entire revenue stream will dry up, and customer disintermediation, as I said, but a lot of new business model, a bigger market, and I would say a blue ocean of opportunity, even for incumbents.
There's been a very closely grouped pack whereby for a long term, they're going to spend a long time working in large banks, it was good enough to be aware of what your competitors were doing and to keep up with the pack. It was a very predictable, very continuous environment. And in that environment, it's very difficult for innovators to get ahead. It's also very difficult for players which are slow to fall behind. And I think with the wave of technology and the wave of innovation that is kind of buffering against the financial industry today, that is the big change. The big change now is that the opportunity to completely pull away from your competitors and also to lose out on a market in a very big way is huge. And it's a combination of a number of technologies which individually will have a major impact, which combined creates a very fluid, very changing, very unpredictable world where innovative and very quick-moving organizations, whether they're banks or tech companies, will thrive. And very slow-moving, very hierarchical, very traditional organizations will not thrive. I think that's probably the biggest change that I think I can see.
Introducing the next topic, which will be on blockchain distributed ledger technology. It also gives me the opportunity to say that in January of next year, we'll be setting up a blockchain observatory and forum with the European Parliament, which will also give us the opportunity to work together with the central banks and regulators on specific use cases. But now the question for our panelists, will blockchain distributed ledger technology or other digital innovation lead to incremental improvements and more efficiency in payments, or potentially to disruption and creative destruction? So, starting again.
Oh, wow. I have to be careful what I'm saying, sitting next to you. But so what we see is that yeah, for sure, and I think we've agreed on that today already, that there are possibilities in DLT. There are use cases already out there, I think, that are helpful and that show that there is a future for DLT. At the same time, in the short run and maybe even the midterm, particularly for retail payments, there are some concerns. And I think a few of those concerns, just to name them, is that first of all, efficiency. I think the algorithms right now don't deliver the speed that you would need in retail payments. You have the smart contracts, the binding smart contracts. That's still an uncharted territory, so that's something to look at. And there's trust. So you do see now the DLT used, but then with separate data storage and restricted access. But one could really wonder if it's still a DLT then that you're looking at. And so bringing that all together and then relating that to a central bank and what should we do, I think that in the short run, it's instant payments and it's open banking that will bring the change, not DLT. But at the same time, in the blog of Mr. Skinner, I think a month ago, it was said that the thing with technology is that the speed is overestimated, but the impact underestimated. And this may well hold for DLT as well. So we are very much investing in building prototypes at the central bank with a blockchain team, just to understand the technology and be ready when blockchain itself is ready as well.
Excellent.
Yeah, I think it's very exciting, actually. If you think about most of the innovation in payments and consumer services have been built beautifully in many cases on traditional payment infrastructure. And there's nothing wrong with that, whether it's the card networks or ACH. And that, of course, we've heard this already today, is getting better, faster payments, etc., same-day payments, and that's all good and well, and tokenization in cards. But it's still the traditional infrastructure very largely. And I think that the distributed ledger technology offers the potential, the perspective of leapfrogging something very new. You think of digital photography versus analog photography, that sort of a change and leap. And I think it's exciting because we're only probably starting to scratch the surface of what's possible, what are the applications. So we have a board director at PayPal, Wences Cesaris, who's one of the leading innovators in blockchain technology, is devoting the rest of his life to it. So we see it as something not near term, but something with exciting potential that we'll stay abreast of.
I would like to widen the sight a little bit. What I believe is the major change enabler are open banking platforms. So, and I believe they will disrupt a certain area of the industry. DLT are one of the technology to do this, not the only one. What is clear to me is that with IoT, Industry 4.0 robots, we will have real-time, digitalized, distributed, and digitalized, distributed, decentralized structure that will require completely different area. So I see billion of devices exchanging values. You can imagine even a storm of drones going somewhere, negotiating and exchanging values. So you will have certainly a customized financial solution for any kind of value creation and value consumption. And so what is a financial institution will be a completely different idea behind that. So when you have a sharing economy, crowdsourcing, decentralized thing, you need an architecture that is completely different. And that's the major disruptive change. So I would say open banking platform, NDLT with smart contracts are certainly one of the most efficient one.
Yes, I think, works. I think the disruption is happening, and I think the impact of what we're seeing with blockchain, etc., will be disruptive, and I don't think it will be a continuous thing at all. And there is a concept of tipping point, and the funny thing about a tipping point is it's obvious it's happened only after it's happened. So looking back, you can say, okay, at that point in time, things kind of changed. But if you live through the change, in many cases, you're not aware that the world is changing around you. So blockchain, for example, Ripple, we already have cross-border blockchain traffic running in production for customers around the world, moving millions of dollars. It's happening. That's one example. And I think in this disruptive world, it's not just the edges of the banking world which are being challenged. I mean, the whole dot-com revolution rather, was around changing the surface of banking, moving from branches to internet banking or to apps. This time, the technology is going right into the middle. It's changing how our customers think. To your point, the predictions are that by 2020, there'll be around 50 billion devices connected to the internet without any people being involved, and they'll start to bank and transact with each other. But also, within the organization itself, actually challenging what makes up a bank, what you do when you bank, how much goes into the structure that we see today as a bank versus an Alipay or an Alibaba, etc. So I think the disruption will come because the technology is attacking every piece of the value chain. And the difficult point is that by the time it's obvious what's happening, it will have happened.
Thank you very much. And Marcus, you led very nicely into the next question, which is what will the competition in the retail payment sector look like in the coming years? More consolidation? Can we expect more new entrants from the realm of the digital platforms? We've heard already today about the GAFA, but not only them. Also Ant Financial, Alipay, WeChat Pay, the Chinese platforms that are using a very strong internal market there to be able to launch globally. Petra?
Yeah. Well, let me first answer the question of what it brings also for a central bank, because it has. We've been discussing a lot about the impact on banks, but also as a central bank, looking at what's happening in the market. I think there are several things we need to do and we are doing. And first, it means that we also have to invest in tech and tech knowledge and be tech savvy, because these are the parties we need to talk to, we need to understand. I think, and I agree on the aspect of the chain being attacked or at least challenged in every corner. And most of these new parties, the new fintechs, focus on one block in the financial system. So who is going to look at the system as a whole? Who is going to look what the impact will be in other parts of the chain? So that is something we can look into as well. And then thirdly, I think we need to have a dialogue with also the new parties. And I agree with the previous speaker who said it's actually sometimes quite hard to find them. So that's something we need to deal with as well as the central bank, and I think that's essential. Looking in the future, and I think we've named many of the parties that will be a player, but I'm also aware that there will be new players we haven't yet thought of. And the moment I realized that was when I was a month ago at the launch of the movement that is called European Women in Payments. And there were 100 women in payments in one room, which was great. And but there also were fintechs, and there were actually representatives from labels, fashion labels like Burberry and Gucci. And the sole reason they were there is because the customer experience, and because they want the customer experience to be seamless, and payment is part of that. And they want to enter through PSD2 the payments market simply to make their product even better by having a seamless payment experience included in the Burberry or the Gucci or Armani experience. And that really opened my eyes as a regulator, that there will be new parties also that we need to supervise, but there will be changes, and some we are aware of, and some are really new, and actually some are quite interesting.
Rupert.
So, I mean, I think competition is accelerating. When I joined Visa in 1999, we used to say, the main competitor is cash. And of course, we've seen today's statistics, cash is still a big, something we're all eating into. But the speed of competition, the nature of competition is just rising all the time, more than ever before. You just think about how quickly the world's changed. I mean, Facebook now has got 2 billion monthly active customers around the world. When have we ever had a world that could happen, people could emerge like that? And the boundaries of competition are changing. Commerce, online and offline, mobile is breaking down those boundaries. And with, as you say, the fintech, regulation stimulating competition. So I think the competition, the pace of change now are faster and much more significant. And to Marcus's point, I do think we will see people not realize it's happening until it's happened to them. For 2007, I think it was, the iPhone was launched, and for 4 years, BlackBerry shipments outsold iPhone, and then suddenly, boom, they dropped off a cliff. And I think that's the real threat that everybody faces.
Yeah, I agree. What is happening is that innovation is going exponential, augmenting the frequency. So all the life cycles are reducing. And this has consequences. On one side, we have even the fintech structure that is changing a lot. But what's happening is that if you have a traditional structure, it's more and more difficult for you to innovate. So open innovation is the driver of all this changement. And also, we have the phenomenon of the GAFA, or the OTT, over-the-counter player that engage the final customer relationship. So the landscape will be very different. A huge role of GAFA, and some fintech arising after a good selection, like PayPal, we have seen here, maybe Ripple. We have heard about Stripe and Klarna. An incumbent that will still remain keeping the market, but completely different way, so transformed by themselves. Some of them able to innovate, rarely, more likely becoming open banking platform, or at least open architecture to access the banking sector. Some of them choosing a very focused business model, risk taker or customer advice, and some of them just continuously buying something, some newcomer. Because remember, some of the innovation are very difficult to do. Coming back to those structure, even your story. Usually, you have a talented disruptor that accept to be paid 20K per year, then to eventually become a billionaire. But to become a billionaire, usually he needs to accumulate maybe 100 million losses, 200 million losses, and then to get the traction, then when the VC fund comes to buy the traction, usually give him more shares. And that's not the kind of incentive scheme that is usually considered sound under actual remuneration policies into financial decisions. So that's the way the financial system is changing. Marcus.
Yes, I mean, what to add? I do think that the marketplace will become more varied, and I don't see things consolidating. I do think what will happen is that the industries which we are used to will start to become deconstructed, and I think new groupings of services will start to emerge. I mean, PayPal, Alipay, for example, combine knowledge around the customer with the payment service. So you have a packaging of services which are very compelling that cross into the banking world, but aren't end-to-end banking. And I think that if you look at the traditional world that is banking or retail banking today, I can see many, many ways that those services could be offered in a very compelling way by very precise organizations which are either around today or being created and being invented. And it goes back to the point that the very kind of like safe, secure world that we've lived in for centuries, really, because the banking world has been automated, but it hasn't changed. It's just become automatic. That world, I think, will start to be deconstructed, and it'll be reconstructed in many, many different ways that actually we can't see today sitting together in 2017.
Well, that's a nice thought to transition to our next question. So let's be consultants now. What should be the strategy for banks? Should they become more innovative? Should they be taking over fintechs that support their business model? Should they be cooperating with them to the benefit of their customers? Petra?
Wow. I think that what is important is, and it has been said, is that the focus should be the customers. I think there's a lot of talk about the customers and about how many of the innovations will help customers. And in a way, the markets will help themselves. But I always think of the example that when we got a telephone, we loved the innovation. But at a certain stage, particularly during dinner time, we start getting marketeers on the phone. And we didn't like that, although they were really, calling us because they really had a good proposal for us as a consumer, but still we didn't like it. So then there's a regulator, and now we have a list, and you can then don't call me register, and you can register in the don't call me register. And the same with email, and we loved email, we could reach everyone in the world, but then spam started to reach us, and it was really good for us as a customer, is the thought of those who are sending it most of the time. And I think that is also with this innovation. So I think a lot of the talking about the innovation is still in the background, having a business model in mind that is good for the bank. And I think what will really help is to look at what these fintechs and the ladies I was mentioning that I talked to at the payments conference are doing. They are really thinking about what the customer wants and why they would want that product. And probably it is something that has to do with hardly noticing that you're actually paying, but still liking the product. And I think that is an area to develop in, and I think there's diversity in that area. So you don't have to be identical as banks. I think there's different spaces where you can focus on because you are focusing on customers and they have different needs. And so there's different possibilities.
Excellent. Rupert?
Well, I've worked for sort of 4 companies in my career. Started out in a UK bank at the Post Office, then for an international bank, went to work for Visa, and now I'm working for PayPal, the last 5 years of which have been based in Luxembourg, running with a banking license. So I feel like it's a world I know. And banking, of course, it just illustrates many different models, many different types of entity, and when we name a bank. I agree with Jose Maria that banks in general have got lots of strengths, but also some weaknesses, and the cultural change and the attraction of talent, particularly around software development, I think are two big challenges. So I think that partnering is hugely important for bank. We certainly feel that at PayPal. Partnering is a core element of our strategy. Attraction of talent. Investing, using our balance sheets to invest, and realizing it's not a zero-sum game. I mean, we spoke about the eating into cash, the huge numbers of people who are disenfranchised with retail financial services, and the power that the software brings and fintech brings and partnering brings on the back of banking to include many more people around the world and make a difference in lives, I think is very, very positive, to address some of the reputational points that Jose Maria. So that would be my advice.
Pietro?
Yeah, I agree with Petra. Focus on customer is the first mission we have to do. And second, I would say to really innovate. If you don't innovate, you certainly would disappear. Doing it the real way, as Chris Skinner was telling us today. And this means become open, much more open than before, because I agree with Marcus that modular architecture of the entire financial system will happen. And so you have to decide your business model. If you want to focus on customer advice, if you want to focus on risk-taking. The most difficult strategy is to focus on transaction, because the market will be much wider than this, but will be much more complex and difficult. So in that area, in any area, you should collaborate, because you are not, if you are a traditional bank, you are not the right place where disruptive innovation is likely to come. And so you need to collaborate, you need to open yourself if you are able to manage IT, open architecture, and cybersecurity. You can even become an open banking platform, as I said before, and try to compete in that area, but will not be room for a lot of players there.
Marcus?
Yeah. Yes, I mean, just to add, I think it's all about being clear as a bank why you exist, and I think a bank has to exist for providing great propositions to its customers, making them successful. So the whole definition has to be around the customer that the bank is targeting. And in that context, if you look at other industries which have gone through significant change in the, let's say, the motor industry today, the top brands, the top vehicles that you buy or that you lease are actually constructed by many different companies. But one company carries a brand, it carries a promised experience. The BMW promise is a promise of experience, or the Fiat, I should say, given where I'm sitting. And those organizations succeed because they focus on aligning that image, that brand, that proposition with a wonderful, reliable, life-enhancing experience for the corporate, the customer that they're serving. And they're less concerned with the departments, divisions, factories, production units that create that end product. The banking world is about 100 years behind that. So the banking world is departments, divisions, structures. So the short answer to the question is banks and organizations which can kind of get their heads into the customer space and can then be very bold about elements of the world they retain, elements they give away, elements they partner, elements they cannibalize, new things they do which may not be in the banking spectrum today. Banks that can be really brave about embracing the new world, I think will be massively successful. So yes, I see a very chaotic future. Yes, I see diversity, but I also see a very, very bright future for the banking world and the financial world, particularly for those players which can grasp the new and are able to adjust and aren't really kind of left in the internal mindset.
I would like to add
Yes,
something.
please.
Add something to this. I agree with this morning view about the liking this kind of environment. We are so lucky to live in a period where you can do anything you want in our business. You can improve anything. So I particularly agree with this approach to be brave, not risky. I mean, brave in terms of improving the way you serve your customer, because at the end we sell to them trust, the ability to manage risk, and we can do it in a much better way to serve them. So, yeah.
Excellent. And now we're going to vote. Could I have the question on the screen, please? Go there. There it is, I think. Okay, so now we turn to the wisdom in the room to answer the question. How would you, if you were consultants, recommend, what would you recommend to the banks? How should banks be reacting to the competition from the fintech companies? Become more innovative, cooperate with the fintechs, or take over the fintechs? And as I understand, you can keep voting while we're talking, so we'll go on to the next question, and please take your time, ponder this question. And I then turn again to Petra. with the question. Fintech innovations seem to be mostly about outer packaging, while relying fully on existing payment products, credit card payments, for instance, and or on existing bank infrastructure, online banking. Where do we expect the disruptive potential of fintech innovations? Petra.
Oh, well, so I didn't bring my glass ball, but I'll throw at it. And I think that is a great question, because speaking to one of the fintechs and focusing on a particular segment of the people in the Netherlands paying, the youth going to festivals, and using through an app the more or less a regular system, I said, do you realize, also with an eye on financial inclusion, that your product is solely tailored on one part of society? So you are assuming that there are others. And I said, yes, of course I'm assuming. And he compared it to the bicycle shops in Amsterdam. He said, there's a lot of bicycle shops in Amsterdam. And I'm selling the cool mountain bikes, and someone else can sell the other bicycles. And I said, well, I agree to that. And I think it's great that there's diverse shopping for bicycles in Amsterdam, but who's paying for the roads? And I think that's a key question. I think that's what I was referring to when I was saying that we have to watch the chain. I think there as a central bank, it is something we have to watch, because there are costs. There are costs simply because something you use is costly. There are costs because we need to keep innovating also the systems. And in that sense, I'm really happy with instant payments, both in Europe and in the Netherlands, because we need to innovate that system. But at the same time, and that's why I think cooperation is needed, if fintechs just want one part of the chain, they just assume that the rest of the chain is taken care of. And but someone has to do that. And I think disruption in that sense of the whole chain can only be done if one party takes over everything, or if part of the chain is being disturbed. And I think that's the part where we have to watch out with. And maybe if I can add to that, I think if you talk about disruption and central banks, I mean, those two words in one sentence is already not very good. And if you have lived through 2008 at the central bank in the Netherlands, you don't like disruption or failure. And at the same time, I think one step that we also need to take is that we accept that failure is an option. So if we look at the new parties, failure is an option. So it's not immediately disruptive if not every fintech that has a license doesn't make it. We need to talk exit plans. Not exit plans that you sell your great idea and live on a tropical island for the rest of your life, but the exit plan that when it doesn't work, it's not disruptive to the system. That's what we need. And I hope we can manage that so well that there will not be disruption in that sense in the system. Of
course, we're trying to think here of positive disruptive innovation, Schumpeterian creative destruction that rejuvenates capitalism, but obviously the disruption is unpleasant disruption for someone who's the competitor that loses out in any case. And Rupert, what do you think?
Well, I think when we think of innovation, most of us tend to think of like the iPhone example I use, or digital photography as another example. But I think a lot of innovation in retail financial services and commercial financial services and payments does come, as you say, with a wrapper, as it were. It's an interface, and behind which the traditional payment players and banks are supporting that and enabling that. And I don't think that's a bad thing at all. If you think about PayPal, it grew up in the dot-com boom, enabling people to buy and sell online safely and securely because they didn't feel their traditional payment instruments worked very well. And it's grown because of that. But it's a wrapper in a sense. People is using a funding source, traditional funding source. So I don't see anything wrong with that. And I think a lot of the innovation that PSD2 is inspiring at the moment, the most exciting, is a wrapper helping solve some of the traditional things. So I see nothing wrong in that. What I would say, though, is I think the other area I think is very exciting for innovation is innovation that people don't naturally think of. I mentioned the example of enabling KYC, authentication in new ways, using AI for risk services, better servicing customers through call centers, better risk management decisions. I think some of the leading innovation that we'd be most proud of would be in those areas that the customer doesn't automatically see. Just makes it a lot easier to do things and get things done. It means transactions just work more smoothly. And yet, on the surface, it's nothing grand, but it was beautiful innovation behind. And the third thing I'd say is that we shouldn't forget, as a point I made earlier, that how innovation, the power of software, can change lives and open up opportunity and for people and businesses. So I see a lot of great innovation occurring, combining traditional players and the fintechs that we're mentioning on the screen.
Yeah, I agree. So I see the outer packaging, the wrapping of a previous solution into a new solution very normal. Remember that all what we see now around that is already in our hands usually started 15 years ago. So we are experiencing the effect of the first wave of innovation. We are not experiencing yet the effect of the Internet of Money, as been called today, distributed ledger, the sharing economy effect. And always remember that we tend to overestimate what could happen in 1 year and underestimate what could happen in 3 to 5 years. And that's because of exponential. So when something becomes digital, tend to become exponential. There's a more law applied there. And when you have something linear that look at something exponential, never understand that 0.005, if it doubles every year, it becomes 100% in 15 period of time. And it get to 1% just in the middle, at the 7th period of time. So when we say something that is, oh, just 4%, and you look at it from a linear traditional organization, and that's an exponential trend, means that it's probably too late because it goes to 100%, or at least his market potential in 4 period of time. So what's happening now is that we have a lot of payment structure from the Internet of Money distributed structure that are around 1%, 2%. That means that in a very short period of time, we'll have the takeover of those payment solutions against the wrapper and outer packaging. That's absolutely normal, but we tend to underestimate the exponential effect when we look at it from a linear traditional organization.
That's true, yeah. That's a great question. I think the seismic shift will happen under the surface of the banking world. So you're absolutely right. For many, many years, innovators have been creating better apps. So the fintech world has concentrated on innovating above the old structure that hasn't really changed. I think what will be different in the next 5 or 10 years is that infrastructure will start to be redefined. And that will be a slower play because it's hard work, but it will have a profound impact on what's possible. So if you look at the internet, very simple idea. Back in the 90s, someone had the idea of, well, why don't we find a way of connecting islands of information together? In doing so, you utterly transform how people think about information. So the way we deal with information today, the apps we run, the lives we live, were unthinkable 20 years ago. And when I started my career, I was playing with LAN networks and little islands of technology and X25 protocols. Nobody thought about IP and what IP could do. So I think the thing to watch for in the next 5, 10 years are other internet-like ideas that start to hit, whether it's social media networks, whether it's players like Cabbage, or even our world at Ripple, where we are redefining how money moves. So we are redefining the world that is dominated now by Swift and the model of the Medici brothers. As these plays start to have an impact, the follow-on impact will be enormous because you kind of redefine, the foundations change. So the point about, what about the foundation? Well, it's different, and it's aligned for a world that isn't there today, but which will occur and will build out in the 21st century. So that's the one to watch for, and that's the one as a player in the market to be really, really aware of and also
prepared for.
Thank you, Marcus. And I'm not only benefiting from the great expertise of this panel, but also from your discipline. So I can ask at least one specific question, which I'll put to Petra. Often fintechs and regulators seem to speak different languages and not really understand the motives, objectives, and responsibilities of the other counterpart. DNB tries to get into direct contact with the fintechs and organizes, we understand, fintech meets the regulators conferences. What are your major takeaways from this exchange with relevance for retail payments? And are annual conferences sufficient, or do you need to have an ongoing dialogue?
Good question, thank you. And yes, indeed, we have these fintech meets the regulators seminars, we call them right now, but we are actually in the process of using that concept to at least a quarter, to have one every quarter. Because one major takeaway is that it's, first of all, it's very much appreciated. It's literally DNB opening its doors for anyone who wants to come. And you don't have to come because you have a specific question. Because if you have a specific question, we have an innovation hub. We have it in person, we have it digital, so you can find us. We even have what we call tailor-made supervision. So if you run into an issue where you really think that this great idea and innovation is simply limited by a regulation, we can discuss and see what was the idea behind the regulation, and can we still keep the idea and thereby living up to the regulation in a different way that doesn't hinder the innovation. So that's there, but then you have the dialogue. And another takeaway for me is that so you need to have these discussions on a case. You need to have just meet each other. I would love to go to all these startup boot camps, but I simply don't have the time. And it's a challenge because often the fintechs have an opinion and I hear them through The Hague or Brussels, but I don't hear them directly. So I think we've started a newsletter now opening up. So I think that that's key. I do think it's key that we invest, and we are doing that more now, in having a tech team to, once they show up, actually be able to have a real discussion and understand what they're saying, and not just being puzzled by all the terminology they are throwing at us. I think that's key, and that means that I have also people in my team now who are different from the normal central banker that was before, but it has an energy in the whole team. And I think thirdly, it is that we have to accept that failure is an option, and that we discuss the exit plans, and thereby making room for innovation.
Well, thank you. And now I'll be at least minimally innovative myself and jump around in the panel a little bit. This question I'll put to Pietro. I understand that Sella Lab opened the so-called fintech district in Milan in September 2017, and among the members are also companies with a strong focus on payments, MyPass, SlimPay, or SatisPay. What are the benefits of the fintech district for Sella Lab? Incumbents are complaining about decreasing margins in payments. Does this affect the fintechs too in their business model and or investors in their investment decisions?
Okay. What we do believe is that the competitiveness of a country, of any place, is based on the ability to innovate. You lose your competitiveness if you are not able to compete in this open level playing field for talent, in this easy access to resources. So if you are able to follow life cycles that are reducing, it's okay. If not, it's a danger. So our first aim is to find the solution, fintech solution, for the innovation of the Italian production ecosystem. So not all the fintech solution that comes from abroad fit the peculiarity and the competitive advantage of Italian companies. So we want to create an innovation ecosystem that works for our country. That's our first aim. And so the idea was to create what we call an innovation hub, where every stakeholder could benefit from participating. Not only the fintech startups, but incumbent that could leverage in opening culture, accessing, collaborate, accessing solution, and authorities that can be know better and wants that even the innovation flow in respect of the law and in compliance, because what we do believe is that everything is changing, but the risks are not changing. The nature of intermediation is not changing. So principles behind are always the same. So keeping a place in where tradition help innovation on one side and makes all the player being helped is our objective. And we really think that even in figures, Italy is lagging behind in terms of VC investments in fintech. We could recover just leveraging the opportunities that the new innovation ecosystem gives, that no barrier to access and global level playing field for talent. And so we think that we could do a very good job for Italy, not for Sella Lab or. And the second part of your question, is the reduction of fees affecting even fintechs? Yes, it depends on your business model. But if your business model is based on a certain kind of revenues, those revenues will dry up. Doesn't matter if you are a new company or an incumbent one. I've seen so many fintechs losing the ground just because of that, and life cycle are reducing for everybody. It doesn't matter how old are you. So.
Okay, and I think I still have time for one or more individual questions. So now we'll move back to Rupert. Long before the term fintech was even invented, there was PayPal in kind of, you could say, a first fintech revolution. In Europe, as you were saying, you've become a bank licensed in Luxembourg and then operating throughout the EU. While PayPal itself is still considered a payment innovator, it's been offering a fintech incubator, we understand, for 5 years now. What are the benefits for PayPal to incubate and give access to your infrastructure and other resources? And where do you see major innovation happening in the core of payments by moving money A to B, or for adjacent services not touching the money as such?
Well, I think why do we get involved in incubators and startups? Again, going back to even just the start of my career, a lot of the technology decisions were determined at the top of the bank and then would flow multi-year, multi-million-dollar investments, and the all-knowing people at the top of the bank would decide those. And now in an API world, the pyramid's completely reversed. And actually providing API, enabling innovators and startups to hook in and use services through APIs, suddenly you get a mushrooming of the innovation opportunity. So for us, there are just many benefits. I mean, firstly, we can start to power the payments of startups and that grow into become the Airbnbs and the Ubers of the world. That's great for us. Secondly, it's a great source of feedback on our service. How do we remain relevant? Because all of us want to remain relevant, whether a regulator or a technology company or a mobile. So we all want to remain relevant. It's a great source of input. And then a great source of just innovation in what we do and service. So, and I would say that a lot of what we feel best about what we do just comes from collaboration with some of our customers, some of our partners, and hooking onto some of what they're doing to make a difference in the world is one of the most rewarding things we do.
Excellent. And now to Marcus. There's hardly any fintech ranking without Ripple. Ripple itself partners with numerous banks, and more than 100 financial institutions have joined Ripple's blockchain networks. Many of the live deployment and pilots currently focus on cross-border payments. Will Ripple transform cross-border transactions by becoming an alternative to SWIFT? And why does there seem to be less emphasis on domestic payments up until now?
Yes, the first question is, I think, absolutely the future is international payments that move in a microsecond, where you have absolute certainty, where you are not chasing a payment, where you have absolute clarity on the costs, and where that payment can have a value of a cent versus $20. That's the need of the world in the 21st century. So Ripple is a classic example of an infrastructure rethink, which is why I think we'll have such a big impact, and also why we're working with so many banks and payment providers. The reason we are focusing on cross-border is because that's the pain point. A little bit like plate tectonics, the pressure is mounting but nothing has changed for a very long time. So we think this is going to happen. So with the cross-border, you're looking at 4 or 5 days of payment time, you're looking at ambiguity, chasing calls, an experience which is very difficult that companies kind of manage around, individuals avoid. We think if we can create an internet for value by connecting cross-border, that'll transform. We're not as focused on the domestic side because we think that's moving pretty well. So with real-time payments for low value, there's plenty of projects in play today. There's a lot of work on cryptocurrencies within a financial system like the euro or the UK sterling, for example. We think those domestic networks will become very, very quick and very, very transparent. It's the international part that really needs a seismic shift, which is where we are focusing.